Wealth is power, and for the elite, protecting that wealth is a top priority. Beyond amassing fortunes, the ultra-rich have perfected the art of shielding their assets to ensure they can pass them down to future generations. From legal loopholes to sophisticated financial instruments, these strategies are as fascinating as they are complex. Hi everyone! Today we'll dive into how the elite protect their wealth, the lessons we can learn from these methods, and the ethical dilemmas they raise. Whether you're looking to secure your own financial legacy, or simply curious about the tactics of the wealthy, this is the video for you. Let's get started. Trusts are one of the most common tools the elite use to protect and transfer wealth. A trust is a legal entity that holds assets on behalf of beneficiaries, offering significant tax advantages and shielding wealth from public scrutiny. For example, the Walton family, heirs to the Walmart fortune, are known to use a series of trusts to minimize estate taxes and ensure their wealth is distributed according to their wishes. By placing assets in trusts, they can defer taxes while retaining control over their holdings. Trusts come in many forms, including revocable and irrevocable trusts. Irrevocable trusts are particularly advantageous for estate planning because assets placed within them are no longer considered part of the grantor's estate, thus reducing estate tax liability. Dynasty trusts, another popular option, allow wealth to be passed down for multiple generations without incurring additional estate taxes. Trusts also provide privacy. Unlike wills, which are public documents, trusts remain confidential, allowing families to keep their wealth strategies hidden from prying eyes. This confidentiality can shield beneficiaries from unwanted attention and potential disputes over inheritance. Lesson: for those looking to secure their assets for future generations, establishing a trust can be a powerful tool. However, it's essential to work with a qualified attorney to navigate the complexities and ensure compliance with the law. Understanding the nuances of different types of trusts can help tailor a strategy that aligns with your specific goals. Offshore accounts often conjure images of secretive Swiss banks, but they're a legitimate tool for wealth management. The elite use offshore accounts to protect assets from domestic taxes, lawsuits, and political instability. For example, the Panama Papers leak in 2016 revealed how politicians, celebrities, and business leaders used offshore accounts and shell companies to hide their wealth. While many activities were legal, the revelations sparked global debates about fairness and transparency. Offshore accounts also allow the elite to invest in international markets without currency restrictions. By diversifying assets geographically, they reduce risk and protect their wealth from local economic downturns. For example, during times of political instability or economic crises, offshore holdings can serve as a financial lifeline. Certain jurisdictions such as the Cayman Islands, Singapore, and Luxembourg are renowned for their favorable tax laws and financial secrecy. These countries attract wealth from around the globe, offering not only tax advantages, but also a high degree of asset protection. Lesson: while offshore accounts can offer benefits, they're not without risks. Transparency laws are tightening, and misuse can lead to significant penalties. Always ensure compliance with tax regulations and reporting requirements. For those considering offshore accounts, consulting with international tax and financial experts is crucial to avoid legal pitfalls. Many wealthy individuals establish foundations or engage in charitable giving, blending altruism with strategic wealth management. Foundations allow the elite to retain control over their assets while enjoying significant tax deductions. For example, Bill and Melinda Gates created the Gates Foundation, which not only funds global health initiatives, but also helps manage their wealth. By donating appreciated assets to the foundation, they avoid capital gains taxes while furthering philanthropic goals. Foundations also provide opportunities for family involvement, allowing heirs to take active roles in decision-making. This not only preserves family values but also fosters financial literacy and a sense of responsibility among the next generation. Charitable trusts and donor-advised funds are also popular among the wealthy. These vehicles provide flexibility, allowing donors to support causes they care about while enjoying immediate tax benefits. By setting up charitable remainder trusts, individuals can receive a stream of income during their lifetime, while ensuring the remainder goes to their chosen charity. Lesson: philanthropy can be a win-win strategy for those looking to reduce taxes while making a positive impact. However, it's important to ensure that charitable contributions align with personal values and goals. Establishing a foundation or trust requires careful planning to balance philanthropic intentions with financial objectives. Life insurance policies are a favorite tool for the wealthy, offering tax-free payouts to beneficiaries. By funding policies with high premiums, the elite can transfer significant wealth without triggering estate taxes. For instance, irrevocable life insurance trusts, often known as ILITs, are commonly used to hold life insurance policies. These trusts ensure that the policy's death benefits are excluded from the taxable estate, maximizing the amount passed down to heirs. Annuities, which provide steady income streams, are another vehicle for wealth management. By structuring annuities strategically, the elite can shield assets from creditors and reduce taxable income. For example, deferred annuities allow funds to grow tax-free until withdrawal, providing both security and growth potential. The concept of premium financing is another strategy employed by the ultra-rich. This involves borrowing funds to pay life insurance premiums, preserving liquidity while leveraging the benefits of high-value policies. The lesson here is that life insurance and annuities can be powerful tools for estate planning, but they require careful structuring to achieve maximum benefits. Work with a financial advisor to tailor these strategies to your specific needs. Understanding how to integrate these tools with other aspects of your estate plan is essential for long-term success. Shell companies, often portrayed as tools for shady dealings, are widely used by the elite to hold assets like real estate, artwork, and investments. These entities provide anonymity and shield assets from creditors or legal disputes. For example, in 2021, investigations revealed that luxury properties in New York and London were often owned by shell companies. This strategy allows owners to keep their identities private while enjoying the benefits of their investments. Real estate, particularly in stable markets, is a favored asset class for wealth preservation. By holding properties through shell companies, the elite can protect their investments from political or economic risks in their home countries. Additionally, real estate investments often appreciate over time, providing both income and growth potential. Shell companies are also used to hold other valuable assets such as yachts, private jets, and intellectual property. By compartmentalizing ownership, families can limit liability and streamline inheritance processes. The lesson here is that while shell companies offer benefits, they must be used responsibly. Transparency laws are evolving, and misuse can lead to legal complications. Ensure compliance with local and international regulations when employing these structures. Leveraging professional guidance is crucial to navigate the complexities of asset protection. What can everyday individuals learn from these strategies? While not all tools used by the elite are accessible or necessary for everyone, the underlying principles can be applied to personal wealth management. Diversify assets. Spread your investments across different asset classes and geographies to reduce risk. Plan for the long term. Establish clear financial goals and work with professionals to create a roadmap for achieving them. Leverage tax-advantaged accounts. Use IRAs, 401(k)s, and other tax-efficient vehicles to grow and protect your wealth. Protect your privacy. Be mindful of sharing financial information and consider tools that offer confidentiality where appropriate. Stay informed. Laws and regulations around wealth management are constantly evolving. Stay updated to ensure compliance and maximize opportunities. The strategies employed by the elite to protect and transfer wealth may seem out of reach for many, but they offer valuable lessons in financial planning and long-term thinking. By understanding these methods, we can adopt practices that align with our own goals and values. Thanks for watching, everyone. Let me know in the comments which strategy surprised you the most or how you plan to secure your financial legacy. Don't forget to like, subscribe, and hit the notification bell for more insights into wealth building and success stories. See you in the next video.